What is asset location and their advantages in portfolio construction? Welcome everyone, my name is Tan and I'm an independent certified financial planner practitioner. In this video, I want to talk to you about asset location. What is asset location? Asset location is determining which type of investment should be in which type of accounts. Why? Different accounts such as individual retirement accounts, 401k, 403b, 457b, brokerage account, and trust have different rules and features. They have their advantages and disadvantages. Also, all investment gains are not taxed the same. They can be taxed at ordinary income tax rates, capital gains rates, and or be tax-free. So why does this matter to you? Asset location lets you take advantage of different account types to maximize tax efficiency, which means asset location could assist you with getting a higher after-tax return for a similar level of risk. Please note that asset location is different from asset allocation. Asset allocation is determining which assets will go where to maximize after-tax return, and asset allocation is the type of assets you own. Like how much should you be in United States, how much you should be in international and emerging market, etc. Let me explain asset location in a more detail and provide more examples. Tax inefficient investment in tax advantage accounts. Tax advantage accounts are composed of two types of accounts: tax deferral accounts and tax-free accounts. Tax deferral accounts where the gains are deferred and taxes are paid in the future. These are your traditional IRA, 401k, 403b, 457, and tax shelter annuities. They are also taxed at ordinary income tax rate. Tax-free accounts are where you pay no tax at withdrawal if done correctly. These are your Roth IRAs and Roth 401k. Tax inefficient investment are dividend-paying stocks, corporate bonds, taxable bond fund, active managed mutual funds with high turnover, real estate investment trusts. Investment that generate income and subject to taxation. You put those in there. Why? For example, bonds coupons are taxed at ordinary income tax rate. If you put bonds in tax advantage accounts, when you get coupon payments from the bonds, you don't get taxed because it is in a tax advantage account. You control when you want to get taxed or not taxed at all, and that is the beauty of asset location. Tax efficient investment in taxable accounts. Taxable accounts are brokerage accounts and trusts. They are taxed at capital gains rate or ordinary income tax rate depending on the holding period and account types. Tax efficient investment are total stock market index fund, broad market ETFs, broad market equity funds, growth individual stocks, municipal bonds funds, tax managed funds. They are highly tax efficient. You put those in there. I like to put assets that have high potential for growth and least tax efficient in tax-free accounts. Examples are small cap, emerging market, international, and value stocks in Roth IRAs and Roth 401k. For the tax deferral accounts like 401k, 403b, 457b, and tax shelter annuity, I like to put real estate investment trusts and bonds funds because if they were held in taxable account, they could be taxed at ordinary income tax rate. For a taxable account, the asset varies because it depends if I'm constructing a portfolio for a high income earner, a retiree, or an investor who wants to fund a goal. Asset location is not set in stone. It could be changed based on changes in taxing rules and unique circumstances. It is best to talk to a professional before making an investment decision. Here's the caveat. Asset location does not take into consideration liquidity and the need for income. What I mean by this is, let's say for a retiree, they need to generate income from their bond funds to live. If all of their bond funds are in 401k, all of that income will be taxable at ordinary income tax rate to them. If they can have some income comes out of the 401k and the remaining money comes out of their Roth IRA, they will pay less in taxes because Roth IRA distribution is tax-free as long as you follow the rules. Here are some questions to ask yourself to assist you in determining which asset should go where. 1. Do I have carryover losses? The rationale behind this question is if you have carryover losses, you could offset the losses with investment gains. 2. Am I maxing out all of my tax advantage accounts? 3. What is the purpose of the money? 4. What is my expected returns on the investment? It's like having a cash position in a taxable account versus a cash position in a 401k. There is no advantages for asset location. The higher the expected return on the investment, the greater the benefit for tax advantage accounts. Portfolio construction is an art. Here are best practices. 1. Set your goals. 2. Set your account types. 3. Set your asset allocation. 4. Set your asset location. Don't let asset location be the primary component in making investment decision. Asset location should complement with your asset location and goals, so you can become a tax-smart and tax-efficient investor. To summarize, you want the least tax-efficient and high expected return investment in tax advantage accounts, and you want your most tax-efficient investment in taxable account. It is not what you make, it is what you keep that matters. Thank you for watching. This is Tan, your trusted advisor.